tomorrow is going to be my last trading day of the year, and then 2025 it's going to be going beast mode. Aiming for it to be my most profitable year yet, so we'll see how that one goes. Obviously, I'll be sharing along everything with you guys in the trading chat. I've already got my Christmas present off of Rudy. See if I can show you. Look at that! Look, victory prop. It says it on the back as well. But yeah, nice little hat for Christmas. You know, happy with that. I got it like I think 2 weeks ago, but obviously I've not streamed for a while, so. But yeah, this is me. Hello, hi. Okay, I don't think many people are going to be joining in past this point, so we'll get started, shall we? If you guys have any questions or anything along the way, just give us a shout. But yeah, this is my gold trading strategy. It's somewhat a scalping strategy, but some of the trades can definitely last quite a few hours. But normally it's sort of half an hour to an hour. Pretty low risk. I wouldn't say high reward, but definitely a decent risk to reward ratio. As you can see on this one, it's 4.38 risk to reward. And effectively what you're wanting is you want some form of break of structure, and you're effectively looking at every single low that the market makes. This can be backed up as well by looking for sort of like significant levels. So for example, for this trade, we were looking at this significant level around here. This can be a good way to give you ideas of when you should be looking at it. But also you want it during high volume periods. So I'd recommend between London and New York session. These are kind of the best times. Asia, it can be a bit hit and miss. Sometimes you get loads of volume, sometimes it just sideways trades. So yeah, you want volume to be high, but you don't want it to be, you know, sort of doom candling like this. Obviously this was yesterday's news, so you know we all knew that this was going to be dangerous because it was FOMC and I believe retail sales. So it's always best to stay out around that sort of time. But about 2 hours prior, take it back to the 1 minute chart. Where are we looking? Just here. Yeah, so about 2 hours, 2.5 hours prior to the news release, we had a nice wick at this bottom. Obviously, we want the wicks to get swept, and we have that previous zone that I already showed you. So we're wanting that area to either get mitigated or swept, which happens just around here. So now we're wanting to see how the market reacts from this point. We get a break of structure just here, and we come back down, and now we want to try and mitigate the candle that started the first candle before the move. Okay, so that would be this zone just here. So we're targeting this red candle before the move happens that then gives us that break of structure. We come in, and this is our mitigation point right here. So we're now wanting to see how the market reacts, but you can already see that it's formed a fair value gap. And this fair value gap is basically what makes this entry model work. So from this fair value gap, you now want 2 bullish candles, and in those 2 bullish candles, you want to seal this fair value gap. It doesn't matter if the candle closes above or below the fair value gap. You just want to invert it with the wick or with the body, and then on the candle close, that's going to be our entry. So as you can see, we entered just here, and your stop loss going to be just below, obviously accounting for spread, just below the fair value gap. That's now an inverted fair value gap. For take profit, you're just targeting the last significant high. I wouldn't class this as a significant high because we've got a big consolidation point. However, this, we push up, gives us a break of structure, then we push down, and we keep pushing down. So this is a significant high. And as you can see, it taps straight in. And as soon as we get out with our profits, we're now no longer interested in what the market does. We're not expecting the market to keep pushing up. We're not expecting it to push down. It could trade sideways, it doesn't matter. So I don't recommend leaving any runners. It would just be a simple take profit right here. You could take partials around consolidation points along the way. It's obviously entirely up to you. Follow your trading plan and, you know, do whatever you feel is best. Obviously, as you can see, news then kicked in and it absolutely ruined the market. So if we did have any runners, you might have even actually made a loss. Just because of like slippage and things like this that can happen during high volatility news. You've got another example just here. So we've got this area here, and this is the first candle before we get a huge downward impulse in the market. As you can see, throughout the day, we've not really had any candles formations like this. It's been kind of like a gradual decline. And then after this candle, huge drop to the downside. So that means that's now an area of interest for us. It's hard to see, but we do mitigate this. And like I said, we want either a mitigation or a sweep. So as soon as we tap into this zone, we're now watching the market. So you can set alerts at this area. And you know, you get a notification on your phone or on your PC. It tells you this area's been touched, and now you're either watching for a sweep or you want a break of structure to the downside, which is just here. So that's our change of character, because obviously the body closed below. We also then take other significant lows. So now we're wanting to try and target the candle that gave us that break of structure, which is going to be this zone here. We come up, we mitigate it. Again, it gives us our fair value gap. And we now want, because it's a sell, we now want two bearish candles that come down and invert this fair value gap. We enter off of the close. So your entry would have either been here or, you know, somewhere around here, depending on how quick your reaction times are. Stop loss, again, accounting for spread just above the high. And we're just targeting the next significant low, which is this one just here. And that one was for a 2.5 risk to reward. I've found that with this strategy, it is usually around a 2.5 to a 5 risk to reward, somewhere around there. And that's pretty much it. It's a really simple strategy, really good for, you know, low risk players. I mean, you know, this is 2.5 points of risk. The trade before it, I believe, was 1 point. Okay, about 1.1 points, or 11 pips. And you know, the rewards can be quite nice. I usually risk about 0.25 to 5%, sorry, 0.5% on each trade. So you know, going off of that basis, this one would have returned me about 1.25% of the account, and this one over here would have returned me about 2.25%. So it's low risk, but it's a nice little earner. I can't really show any more entries because there's not been that many plays this week, just because the markets have just been all over the place, to be totally honest. We've been ranging most days, but then having huge breakouts during Asia, and then kind of continuation. Oh, we do have... Is that another one? Ah, okay, yeah. So obviously just here we've got this candle here that pushed us up. We've come back down, we've pushed back up again, and now we're wanting to see some form of bullish movement, right? AJ, I'm showing an invalid trade right now actually. So obviously this trade, you're going to look at it and go, well, it was a winning trade, like why is it invalid? There's there's multiple reasons as to why it's invalid. Uh, First of all, you've got this area just here. We've already mitigated this zone, and it's already then given us our break of structure. So within retapping this, it invalidates our setup. The second reason is that yes, we have our fair value gap just here before entry, but we don't have two bullish candles. We have one bullish candle, then a bearish candle. So our entry point wasn't valid either. Hey Joe, how you doing? So going off of this, it's not actually a valid trade, even though, I mean, I didn't take this trade. I just randomly marked it out in the chart. I will admit. But even though the trade, shows itself as winning and secured a 1.4 risk to reward, it wasn't actually valid for our setup. Another version that's not valid is right at where the market is right now, just here. So again, we push up, we get break of structure, and then we get change of character along with a more valid change of character. We've got our liquidity point just here. So we now want this to go and get swept. And we have this candle here, which is the first candle that started the move that gave us our initial change of character. We come in, we mitigate this area. We have two bullish candles. But the reason why this isn't valid is because we didn't close that fair value gap within those two candles. Obviously, we closed it on the third, but it's the two candles that are the most important. The two first candles are the most important. If it closes on the third, it's not valid. And the result is it came and hit our stop loss. Again, I didn't take this trade, I just marked it out for educational purposes. But it looks like the perfect setup, and it just goes to show that if you miss one step, it's not going to work out. You need everything to line up. So that was an invalid trade, even though it presented itself as perfectly valid. And these are the types of traps that you can get caught in sometimes. Is obviously, you might have had an alert set here, or set just at this like liquidity point here, or even at the top of this order block here, and been watching the market straight away. You might have then seen it and gone, oh yeah, we've got a fair value gap, two bullish candles, going to quickly jump in. But you've just overlooked the fact that we never actually inverted that fair value gap, and that is one of the most crucial points. So just remember to always make a step-by-step guide for your trading strategies and follow it from rule 1 down to the last rule, and make sure that everything follows. Otherwise, you can definitely get caught in traps where it looks like a perfect setup, it presents itself as a perfect setup, but you'll lose money nonetheless. For those of you that have just joined, I'm just going to run over it one more time. So this is an ideal setup. I'll go back over to the 5-minute chart for it, just because you need to recognize why we're interested in this zone. And we're interested in this zone because we have this area on the left, which has then given us a push to the upside. And so we're then going to break it down onto the 1-minute time frame. This is a 1-minute time frame trading strategy, but the 5-minute chart can be used for areas of interest only. So we'll break it down onto the 1-minute. And again, there's our zone here. What we get is we get a big wick here that we're now wanting to get swept. It sweeps it, pushes up, gives us a break of structure. So now we're focusing on the one candle before the move to the upside that gave us that break of structure. So this is our candle here, this is our zone. And now we're not wanting to sweep it, we're now wanting to mitigate it, which basically just means come in and tap in to have those orders filled. That'll be either stop losses or take profits. And you're wanting that to mitigate with a fair value gap. So just here, you've got your fair value gap just between these wicks. And now what you're looking for is you're looking for two bullish candles. And on those two bullish candles, you're wanting to invert the fair value gap, which basically just means to fill the fair value gap. And then you're entering off the close. Once you enter off the close, your stop loss is at the very bottom of this fair value gap, accounting for spread. And then you're just targeting the next significant high. And like I mentioned previously, we're not interested in this area here because this is just a consolidation zone. I wouldn't say this is then a high. So this would then be our next significant high. And it ran for 4.38 risk to reward. Any swing high or low to mark on M5 or some particular ones? So basically, yeah, I just would go on minute 5 and just have a look at any and all sort of major swing highs and swing lows that give us either a new high or a new low. So, for example, these lows and these highs, not interested in. You'd be interested in this low here or this high here, because those are the ones that give us those market structure shifts, those breaks of structure, changes of character, whichever ones they are. You know, these are the ones that you're wanting to really focus on. You're also wanting to have a look. It's basically just supply and demand. You know, you're following supply and demand basics, but then you're breaking it down on the 1 minute chart for kind of a confirmation that it's then going to work. You know, so for example, here on the 1 minute chart, we came in, we tapped in, and then we got that break of structure. We came in, tapped into the order block with that fair value gap. That's one of the most important things. Is you'll see a lot of times it will come and mitigate the order block, but it won't have that fair value gap and it won't invert it. At which point, it's then not a valid trade. But in this case, obviously it was, and we caught that trade. You're not interested in what the market does afterwards. You know, you're not leaving any runners. You're not trying to, you know, if it comes back down into this zone, you're not rebuying. It's just a quick get in, get out, and then forget about the trade. The FVG should be near the mitigation point, or should the same candle hitting the order block? I like it to be the same candle that's mitigating. So exactly like here. Obviously, we mitigated it with this candle here. I mean, we technically did with this one, but we then confirmed the mitigation with this candle, and then we pushed up. Wick breaks, yep. So you're wanting it to mitigate it with the fair value gap. Don't mitigate it and then form a fair value gap within, because it's not valid. I would try and find a scenario like that, but I was trying to find one earlier, and yeah, I can't find one. But yeah, you're wanting it to mitigate it with the fair value gap. You're not wanting it to form it within or before or anything like that. You need it to be during the mitigation. The fair value gap's then formed. Invert the fair value gap, get entry on that second bullish candle, and then you're targeting the next superior high. When should start counting / expecting the 2 consecutive candles? So you're expecting the 2 consecutive candles, the very next candles, either of the fair value gap or the next one afterwards. So, for example, let me try and find one. Yeah, so let's take this for example, right? Obviously, this is in no way, shape, or form my strategy setup, but obviously you've got this fair value gap right here. Okay, it takes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It takes 11 candles to then come up and fill this fair value gap, right? That's not valid. So you want it to come, form the fair value gap, and then either the next 2 candles, or if this candle closes bullish and say it closed here, you then want it to be that candle and the next candle to then push up and fill that, because it's then indicating strong signs of being bought back up. Or obviously if it's the reverse case and you're looking for sells, it's being sold off. But yes, Lee, this is a gold scalping strategy on the 1 minute time frame. Basically just using significant points of interest on sort of the 5 minute or 15 minute time frame, and then you're wanting to get breaks of structure or change of character, and then break it down on the 1 minute. Have break of structure, come in, mitigate the order block with a fair value gap, and then in the same 2 next candles, invert the fair value gap. You enter off the close, your stop loss is at the bottom, and then you're targeting the next significant high. Yeah, pretty much, Lee. It's very ICT-ish, but you know, it's working pretty well. I caught, I think, 3 trades this week. Oh, what about US 30? Is that one still marked? There you go. That's the US 30 trade of yesterday. So it came down, had a nice break of structure, came down, mitigated the order block, caught entry. Stop loss was just below this order block here, and then targeted this high and caught a 3.4 risk to reward for 138 points. So can't really complain. The types of LQ and IDM areas according to you. Well, I mean, in terms of the strategy, you're not really looking for much, to be honest. You know, you're literally just targeting sort of any major high or low, and then you're just simply watching at how the market reacts in that area. You know, you're wanting just a break of structure, mitigate the order block. You know, you could classify that this was liquidity just from the simple fact it's wicks. You know, then the main area was obviously this area over here. But, you know, in the same sense, you could also argue that, you know, we were targeting this area and, you know, this was your liquidity here, you know, your trendline liquidity. But, I don't know, liquidity doesn't really play too much of a part into it, to be honest. That's entirely up to you. If you want to take partials, you know, if that's the type of trader you are, then, you know, feel free to do it. You know, for example, you know, if you came up to this sort of consolidation zone here, and you know you weren't too sure because it might get choppy around this point, you know, you might have secured your profits at the low just as we start tapping into it. You know, you might have seen this order block here that gave us that break of structure. You know, you might think, oh well, you know, it might reverse there, so I'm going to secure my profits here. Personally, I don't. I just like to simply hold it for the high. That's because I'm not really risking too much on this strategy. You know, I risk between 0.25 and 0.5% per trade. So, you know, there's not really that much risk. So I'm more than happy to kind of hold. But you know, you gotta follow your own trading style and just do whatever works for you. You know, you can still quite easily make good returns with this strategy, even if you do take partials and then stop loss to break even. Yeah, it's all up to you. You know, feel free to back test it, journal it, see what's more profitable. I'd actually be really interested in knowing what your results are, so just let me know. This is the sessions indicator. Looks algo sessions. And basically I've changed it to just be New York time frame. I only trade 2 hours of New York, so I've only got 2 hours there. Obviously, I know that's not the correct time period for it. That's the full London and full Asia, and I've got another one set up for a new method that I'm testing, which is going to finally give me a strategy name, right? And it's going to be B-Dubs Fight Club. And basically, this is the New York fight, and it's just a fight between bears and bulls in the first 15 minutes of New York Open. See who wins, and then follow it in that direction. So yeah, B-Dubs Fight Club is gonna be popping, you know. Yeah, we all made mistakes during the start of our trading journey. Is part of the game, I guess. Yeah, live and learn. But anyway, guys, there seems to be no other questions, so I'm gonna call it there. Like I said, we're not really looking for entries. We're not doing a charting session. It was just simply to show you what's been working for me. I've been kind of testing this for the last 3 or 4 months now. And it's been giving me really good results. So, you know, I just wanted to kind of bring it to you all. There might be more streams in the new year. Maybe during sort of like London session or New York session where we'll be taking this live and, you know, possibly getting entries together. But yeah, other than that, Merry Christmas, Happy New Year, and I will catch you all in the next stream.